5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
this is breaking news. Where is it going next?
Ladies and gentlemen, welcome to the Stock Legends Radio Show. Please welcome today's host, myself, Quick Draw. Also, today we have a special guest that we're excited to have. His name is Darren DeRosa, and he is the current CEO of public ticker symbol STCC Sterling Consolidated Corporation. Darren, welcome to the Stock Legends Radio Show.
Oh, thank you for having me. I appreciate it.
The pleasure's ours. Now, Darren, for the listeners that may not be familiar with you and your past and what brought you to where you are today in the public market, why don't you tell us a little bit about your company and what your goals are for the future?
Sure. Well, the company is Sterling Consolidated Corporation, and the ticker symbol is STCC, and we've been in business about 40 years, and we primarily supply industrial rubber components to the automotive, pool, plumbing, and gas industry. So anything that prevents a liquid or a gas from leaking, hoses, fittings, stuff like that, and we provide the seals for those type of applications. So Sterling Consolidated is made up of 4 entities. We have Q5, we have Q5 Ventures, which is a real estate holding company. We have ADDR Properties, which is also a real estate holding company. We have Sterling Seal and Supply, which is the main engine that drives the profits, and that's the company that does all the importing and distribution throughout the United States. And we also have a freight forwarding company called Integrity Cargo, which handles the importation of our goods, which mainly are produced in China and Vietnam. And 2013, we went public, and we've now been trading over the counter for about a little over a year.
With a combination of these 4 companies, is there any specific company that you kind of want to narrow down and discuss first? I see you've got it kind of segmented between a real estate faction and then also a seal manufacturing.
I mean, the bread and butter, our main entity is Sterling Seal and Supply. That's where we have the 5 locations throughout the U.S., and that's our main profit center. That's what generates all the activity that the other companies can use and expand upon. The other entities were set up along the way. As we grew, we try to branch out into other segments and provide a little better services to our company, to our customers.
For our investors that may not be familiar with you and yourself, what brought you into the public market? When did the decision come in? Hey, you know what? Let's try and go into the public segment. Let's see if we can benefit from this. What brought you to that decision-making point?
About 4 or 5 years ago, we got to the point of about $5 million in sales, and we realized it was getting very difficult to continue to grow the business as we were, hiring salespeople, pounding the pavement, knocking on doors, trying to throw the other guy out of it, and we kept competing, and we went from maybe $1 million in sales, we grow like 5%, 10%, and we got to $5 million in sales, and we kind of plateaued. So in order to get to the 10 million mark was my next goal. I said we have to do something a little different. We can't keep hiring salespeople and investing in our pipeline and trying to we have to grow faster than this. It wasn't it was taking too long. So I decided that there's companies throughout the country that had an aging ownership. Guys ready to retire, looking to sell, and I needed to come up with a way to purchase these companies without continuing to leverage our assets, our real estate holdings, and stuff like that. And we were presented with the opportunity to go public by Madison Park Advisors, and we thought that would be a great opportunity to use this stock as a currency to entice other owners who may want to stay on for a couple of years. Here's a way you can sell a portion of your business and then sell out over a period of time. So because a lot of guys want to stay involved, stay in the business, but they want to take some chips off the table.
So by utilizing an aggressive acquisition strategy, have you been able to grow that core business?
Yes, actually, we've performed 2 acquisitions in the first 8 months of being public, and we were able to grow our reach throughout the United States. My ultimate goal is one day UPS throughout the entire United States. And right now, We have locations in Massachusetts, New Jersey, North Carolina, Florida, and Pennsylvania. So we have a good reach from Maine to Florida in one day, and we go as far east as Chicago. In our business, rubber is pretty heavy, considered how much the value of it is pretty cheap. So the price per pound isn't very much. However, you start spending, UPS reds and overnights, it starts to get pretty expensive to add to your cost of the goods. So that's why we can provide a competitive advantage to, let's say, a Texas company trying to sell in Ohio. Well, we're into Ohio in one day, and that's our goal, is to get throughout the United States all in one day, UPS, regular ground shipping.
Let's take a look at the actual fabrication. So do you start with let's picture as maybe like a cinder block of rubber, and then do you put it into a CAD type of system and spec out the seals and cut and fabricate them, or what exactly is the process involved?
The way an O-ring is made, let's take O-rings, the main product line that we supply. It's a waffle iron technique. So the rubber's cured, it's put into strips, and they have, half of the O-rings are on the bottom and half are on the top. They lay the strips over into the waffle iron, compresses down, is heated up, which molds the rubber, and then after, a minute or two, pull it out, and that you have your basic rubber material. So after that process, it goes through an inspection process. They take off any flash, any excess rubber. It's inspected, packaged, and then shipped to us in the United States. We provide a service to our customers that they can value our expertise and our engineering to know that they're getting quality, ISO certified, TS certified automotive parts, and in a realistic time frame. Not waiting 3-4 months for products. We have about $2.5 million worth of inventory, and our accountants don't like it, but our customers do, because they can rely on our inventory to get them the product, within a day or so when they order it. So most of our customers have they're buying the same type of products, the same products over and over, but they don't want to keep the inventory. They're doing assemblies and, the work in process, they try to keep as low as possible. So that's the service we provide.
Now, is this primarily, I heard you mention the automotive industry, is this primarily segmented towards the automotive type of application?
Yes, the majority of our business is aftermarket automotive. So we supply transmission repair kits companies. We supply, companies that are fixing the O-ring. There's about thousands of O-rings in every car. You're sealing the gas caps, you're sealing the brakes, brake fluids, transmission fluids, windshield wiper fluids. Anywhere there's a cap or a seal, I'm sure people have, if you've been in an auto body shop, you see them on the floor. And that's primarily what we target. We have a couple of products that go to GM and Ford in the primary production, which we ship direct from China to Malaysia, and that's where they're assembled. But for the most part, we stick with the aftermarket, U.S.-based marketplace.
Now, what do you value this overall market within the United States? If you had to put a number on it, how large do you think this industry is as far as potential revenues?
Just strictly rubber distribution, they estimate is around $4 billion. The large players are, the Parker Hannifins of the world, and their reach is so vast. They have so many different product lines. We strictly stick with, smaller, standard industrial rubber components. And then the latest I've heard is about $4 billion. So we have plenty of room to grow.
What are the names of some of your other clients? I heard you mention GM. Are you working with like AutoZone, or I know that they do a lot of aftermarket parts. What would be some of your primary clients?
Our primary client is, I'd say, like Freudenberg, NOK. They do, before it gets to AutoZone, our customers are putting it together. So let's say the O-ring is one component in a kit that's going to AutoZone. We will supply the local kit manufacturer, kit assembler, and then they would present it to AutoZone and those type of companies. For instance, we supply little rubber seals that go into switch covers that are supplied to Grainger, the McMaster cars, that type of companies. So we are even one step before them.
Oh, that makes sense.
We recently signed on with Amazon, so we package for them exclusively, and then they sell it on their website.
Now, do you have any other additional goals for the company? Amazon's a great utilization. A lot of these sales nowadays are online. You used to have to open up a store in order to get business, but the internet's really opened up a huge marketplace. Do you have any other goals for future expansion, maybe more relationships similar to the Amazon relationship?
We definitely want to expand our web presence. That's one where we need a lot of work. And we recently signed on with NetSuite as a cloud-based system. We've revamped our product part numbering system. We always had one system where we could see all our inventory, but now we're putting it all online so our customers can see, what's available, when's in stock. And NetSuite allows us to keep some of our products prioritized to those customers as well as selling to the general public. And that's one focus. We've always relied on Amazon to take care of our retail business because they do it much better than we could ever. But we want to provide our customers with a better service and improve our web presence. The reason why I like to have local distribution is that, like I said, the ground transportation gets so expensive, and our future goals is to get to 10 million in revenue. And by this, I think expanding upon our web presence, another 2 or 3 acquisitions will be, that we have down the road will by far exceed 10 million in sales. I don't know if you noticed as well as Amazon also opened up the brick and mortar store in New York. So I think they are realizing that, web is great, but you can't beat, immediate out of stock service. The local guy, I think web makes up less than around 10% of all sales. So while we like to do the web presence, I still like to rely on the customer service of one day, localized service.
That makes a lot of sense. Yeah, I mean, basically, you take a look at these larger companies, Amazon, they have the statistics, they have the market research. They're always going to be on the cutting edge of wherever the clients are going to find the end product. What markets do you have your sights set on? Are you staying, or do you want to stay with mainly football named cities, or are you looking for cities along the coast? I see you kind of have a lot of centers set up on the East Coast, kind of along the shore. I mean, is that the strategy that you want to hold on the West Coast as well?
Our current strategy is to go west. We feel pretty comfortable with our regional presence on the East Coast. We have a sales team in each of our locations who consistently visit the customers. Like I said, a lot of our business is repeat business. If they're buying one size rubber, they're buying a few different ones, and we try to keep the service levels up so that we maintain that business. Our future expansions are into Colorado, California, and Ohio. Those are the 3 next stages of acquisitions. We've had preliminary discussions. We've talked numbers. We're into the a little further along, and I think within the next probably 3 months we should easily lock up another acquisition in one of those 3 states. What I've learned along the way is there's plenty of opportunities. It's sifting through and finding the right fit, organizationally, and the right fit financially. A lot of times private company owners tend to overvalue their companies, or they're taking out a lot of money, in which case I can't afford to pay them, or I don't want to pay them to, so that they can retire rich. I try to, get good value for our organization going forward. But definitely West Coast expansion. My ultimate goal is the one day UPS, overnight to regular ground shipping. They get it one day throughout the country. And we worked with UPS to find which cities would be ideal for that type of distribution and where we would need to be, so we wouldn't have to have 50 locations in every state, but you can have 20 locations throughout the country and you can still hit every segment of the U.S.
What do you think the most strategical point of these acquisitions are? Are you looking for acquisitions of companies that are in the exact same industry as you, or do you think the old client list is the best asset of an acquisition? Do you think it's the revenues that are being created, or do you think it's the model? If it's similar to yours, what's the biggest asset in these acquisitions?
I initially started with 40 companies who were companies we've done business with, whether they're a customer, a vendor, or a competitor that we met along the way. And our goal is to keep them under 5 million in sales. And they had to have profitability. We've come across a couple of companies that their sales were pretty good, but they weren't making a profit. And I felt that there could be opportunities. We still looked into it, but it's easier to keep piling on the assets and piling on the profitability if the company's already making a profit. And right now we've stuck with distributors of rubber products in our field that I'm familiar with. I'm trying not to get too much of an expanded product line because the more I need to learn, the longer it takes. And there's so many companies now that do pretty much what we do. And I think if we can, keep acquiring them and folding them into the mix, we can just keep expanding our revenues and our bottom line profit. That's my ultimate goal, is the bottom line profitability. Revenue's great, but if you can't make a profit, what's the point? And so I think with these next couple acquisitions, they have nice profitability. They can easily be folded into our current product mix because they do primarily the same things that we do. And going back to our software that we recently started using, this NetSuite, it's cloud-based. I mean, all you need is an email address to get set up, and you're within our system. It easily imports other databases. As long as you can export your data to Excel, we can import their inventory, their customer list, and it's really helped us speed up our process of folding in these acquisitions. Our last one in Pennsylvania, we were able to fold in. We closed April 1st. We let them run one quarter on their old system, and then within the first week of the third quarter, we had them up and running, on our system. And it's really made it a lot easier. And we also outsource our HR through ADP, and they've also been very helpful in getting the employees onto our health insurance plans, our 401k plans. It's really streamlined the process.
Wow, that's great. So you have a 401k plan in place for your employees, healthcare.
Right.
That's fantastic. How many employees do you have, would you say, nationwide?
Right now we're at 30, so we're still a small company. But when we acquire a company that does, let's say, $500,000 in revenue, 4 or 5 employees, they're usually part-time or they're full-time, but they don't have health benefits. So it's really been an asset to keep the key employees. The owners may or may not leave, which is okay with me, as long as a couple of key employees stick around for the transition. A lot of them find that we provide better benefits than what they were getting, and they seem to be more interested in staying around and making sure that the deals work, which is a critical aspect of the deal because we can't spend a lot of time bringing them on board. So we try to entice them with a little better benefits and try to keep a good working relationship.
What's your overall feeling within the public segment thus far? Do you feel good to be in the public segment? Do you think it was a wise decision? How do you see that affecting the growth of the company? We
got out of the gate. It was a little rough, I'll be honest. It was a big learning experience. 40 years in business, being primarily single ownership, we ran it like a small business. And in order to get to the public sector, we cleaned up our accounting. I shouldn't say cleaned up. We organized it. We organized our accounting system. We improved our structure. We improved our legal, our documentation. Going to a new order processing system really improved our company overall. We learned a lot along the way as far as investor relations, who to use, what not to use, how much things should cost, shouldn't cost, how much energy to spend, promoting the stock as well as making sure we run our business and maintaining a profit. And I think 2012 and 13 sales were good, but we lost sight of track of, we needed to generate more profitability. And 2014, we really focused back on our company, implementing our strategy of acquiring companies that are good companies and putting them into the mix. And I think now is the time that we start getting back out there and telling our story again and telling, the space we're in, over the counter is great for where we want to go, but we're using it to get to the next level. And we want to, get to 25 million in sales and uplist it to the next exchange. And I think by the end of next year, we will be on our way. We have a plan in place that, once we get to those numbers, to get uplisted. So investors can look forward to a potential uplist. What would you like to say to the investors that are new to the company? What's there to be excited about? Maybe you just want to thank them for coming on board. Our private placement investors, I feel like I owe it to them personally as well as, I'd like to thank them for, sticking with us and getting in there. I had a call the other day from one of our customers who said he just recently bought some shares. They like what we do. My goal is to make them happy. That's my ultimate goal, is to just keep generating profits. We've talked about kicking out a dividend, maybe on an annual basis, just to the shareholders of record, not necessarily insider shareholders, just to the public shareholders, to show them that we want to be one of these industrial companies that you can count on year after year for profitability, a nice return. We're in the market of high tech, high energy space where there's a lot of flyers out there. Some hit big, as you're aware of. But we want to say, look, we're using this over the counter to get to the next level. And if the next 5 years, definitely see a big return.
Now, you speak briefly about the private placements. Do you have a lot of private placement investors? And what part of the game plan has private placement fulfilled as opposed to the public side?
The private placement we primarily used to get us to the public sector. We didn't spend a lot of time raising as much as we could privately. We just said we needed to get number of shareholders on record. We raised about $300,000 and used those proceeds to get us public and to use it for marketing to get us out of the gate. And now we want to use the public sector to get us the acquisitions and get us traded. The reason we like the over-the-counter space is, for the price we're at, we can get many investors consistently trading, hopefully, and so we can start seeing some way to use the capital to allure other owners of smaller businesses to sell their companies to us, because that's how we see our growth going in the future, is to use the stock as a currency to grow our sales and really get to become a bigger company.
What kind of growth do you think you'll be able to uphold over the next year or 2 years, or even on an annual basis? Within the stock market, growth is everything. Doesn't have to be big growth, but if you can keep a consistent growth, typically you can keep the attention of the market. What are your goals as far as growth is considered on an annual basis?
I'd like to, 10 to 20%. I think we can realistically hit those targets and maintain our profitability. And I think over the next 5 years, we should be able to see close to, 30 to 40 million in sales. I don't see why that wouldn't be possible. There are a couple of companies we've been talking to recently this year. I was surprised at what their revenues are. I had a number in my head, but when we actually sat down and talked to them, it was much higher. So keep growing the sales organically as well as, through acquisitions, but primarily focused on acquisitions.
Do you have any plans to open up to a global market, or do you like to keep it just U.S. based?
We do have several companies that we do business with in South America, South Africa. I think our expertise and our competitive advantage is in the U.S. There's quite a bit of marketplace here that we need to tackle first, rather than, taking on some more risk to try to get globally. We import from China. We export some stuff to the UK. We, like I said, we export to South America. Europe pretty much imports directly from China and India themselves. So it's hard to compete in there. And as the US is having like a manufacturing renaissance right now with the oil and gas industry in Western Pennsylvania, which is our last acquisition. I was shocked at the amount of activity that's going on out there. It's just like a new frontier. People are drilling. There's hotels are booked up, and that's the kind of marketplace we want to start attacking and trying to build upon.
How have you seen the industry change? I mean, you've been in the business for 40 years. That's quite a long time to be in an industry. So obviously you guys are professionals at what you do. Have you seen the industry evolve or change over the last, let's say, 10 years or over the 40-year period? Have the recent years developed at a rate that you hadn't seen in the past?
Well, I've been doing this about 20 years. And so when I started, it was right in the beginning of the internet era. And it used to be, there was only a handful of people like us importing from China at those times. And it was considered the cheap goods. Oh, you want China? That's garbage. However, they've improved their engineering capabilities. The Germans came in and developed some machinery that they started to import the technology, and their manufacturing is competitive. But with that said, we stick with about 10 core factories that we use, that we've visited. We've approved them to do business with. We know their capabilities. They're all certified for automotive with the big names like Nissan, Toyota. And but with the Alibabas coming around, everyone thinks they can import from China. There's a lot of risk with that. You could save yourself 10, 20 cents a piece. Next thing you know, you're getting hit with lawsuits because parts are failing, and you don't want a lawsuit from an automotive factory or an automotive supplier, because that'll put us out of business. So we're with like aerospace and military. So with aerospace and military, we tend to compete with our have a competitive advantage in that we've been doing this a long time. We're confident in our factories. Our factories have grown with us, and they really provide a quality part that we don't have to worry about on a consistent basis. And we can feel comfortable sending them new parts, new prints, and they'll make the quality parts.
How does that actual process work? Let's say, for example, a part fails and there's an issue with a part. Now, would you have to hold responsibility for that, or is there an insurance that you carry to protect yourself from that, or how does the risk part of the industry work?
Yeah, there is risk. We are treated as a manufacturer. Our insurance is set up so that if there is a failure, we are treated as a manufacturer of record. So our customers have confidence that they're not buying from a Chinese firm, that if a lawsuit does happen, they're not stuck, trying to find some source in China that you're going to go sue, which you'll never happen. You'll never win, or never you get off the ground. And it allows us to go to our customer and say, look, you may import some of your other stuff, but you could be confident that you're getting good quality parts from a local service organization who has a protection, a U.S.-based insurance firm behind it. Luckily, I've only had one or two instances of product failure. A lot of times it's, over engineering, or there's an engineering process that broke down. For instance, like we had a problem with a GM seal, and it was taken care of within, I want to say, like a couple hours. They have a way, if the product fails, they pull it off the line, they take a picture of it, and it's emailed to everyone associated with that product within an hour. I mean, you get an email saying this product failed. They automatically pull your parts off. They reinspect all the other ones, and then it goes back before it goes back into production. But we're talking about, one piece out of 1,300,000 we shipped them over the course of a year. And they had one piece that had a little excess flash that they didn't like. So the effective rate is so low right now. It's virtually not even an issue.
You said that you like to keep your business model simple, keep it with the auto industry. I mean, let's say, for example, you do an acquisition and they do another segment of business. Let's say that they create rubber buffers or something like that. Is that something that a new venture that you would acquire in that acquisition, or how exactly would that work after an acquisition is completed? Well,
our factories are equipped to they can make any sort of rubber product. So I feel if we do have an opportunity to, let's say, like you said, rubber bumpers or grommets or some of the little that we may touch upon, if we have an opportunity to go in there, I think we can, save some money, cut some costs by using some of our expertise in our factories that are competitive in, whether it's a price or quality. We have different sources for different reasons. Like our Vietnam sources is less expensive for the standard down and dirty type applications. We tend to use them. The high-end, high-tech automotive suppliers, we stick with the Taiwanese. They tend to do a little better job, and they've been doing a little longer. So I would never turn down an opportunity for products, as long as it's within the realm of our product scope. If it's a rubber good that I think we can either compete with and cut some costs, I'll definitely entertain it. But right now, like I said, I try to focus on, there's so many companies that do primarily what we do, maybe just not as well or in a smaller area. That's what I'm focused upon.
Your stock price right now is at 4 cents. Let's talk specifically about the trading in your stock.
Sure.
Where would you like to see the stock, and where do you, based on your opinion, see the current value of the stock?
The current value is well undervalued. I think we should be in the 10 to 15 cent range. I feel that we're trading below our market cap. Our market cap's below our inventory, and it's also below our assets. We spent the last 6 to 8 months really revamping our structure of our company, the way we do business, our part numbering system. We've improved our order processing system. We've improved our cash flow. We refinanced back in October to structure it so that we had cash to go out and spend money, seed money, trying to get companies on board. We've made a couple of acquisitions. We've actually improved our profitability while improving our revenue. And I think we need to start telling the story again, getting out there and really building upon what we've built.
What would you tell investors that are listening today? What should they look forward to in the next 6 to 12 months? You said that there's another acquisition that you might have on the table. How many acquisitions per year can they look forward to? And what else do you have that the community could get excited about?
Our next 3 to 4 months, I expect to close another one in the western half of the United States, and there's about 3 to 4 that we've progressed that I think we can close in the next 12 months. And I expect next year to be in the close to 20 million in revenue based on these 4 acquisitions going forward. Product line is very similar to what we do, and they have the markets that we are currently very light in. Like, we sell a little bit. We have a few customers in their regions, but it's difficult to compete, and that, they do a pretty good job out there, and they seem interested. They like our story. They like our teams that we have built in place, and I think it would be a great fit. A lot of these companies too, the more time you spend with them, the easier it is going forward once we are on the same team and once we join forces. They feel comfortable with the other management in place, and it doesn't really disrupt the apple cart. So by the end of next year, I expect to be close to $20 million in revenue. And if we maintain our profitability, there's no reason why our stock shouldn't be in the 60-cent range.
For new investors that are listening today that may be looking forward to investing in your stock, would you like to welcome them on board? Maybe give them some future insight or credibility to the investors that are currently there? Maybe thanking them for sticking with your company.
Yeah, absolutely. I'd like to thank the current investors, especially our private placement people who are sticking with us. I know some have bought back in on the dips, and we really refocused our energies on acquisitions. We've improved our company structure. We've learned along the way of our 2 recent acquisitions, and we look forward to continuing the profitability. And if you look at our stock, you do a little research, you'll see that we've really bounced back, and I think we're coming back stronger. And I appreciate all the support. Where
would you like investors to go to get additional information on your company? Perhaps a website, or maybe even a call-in number for more private placement or large-scale investors?
Our website is sterlingconsolidated.com. We have an investor tab that gives all the highlights and the most recent stock information, as well as an 800 number to call, for more information or for private placement investments. We're available, to talk with anybody. We don't turn down any sort of opportunities. We look forward to keep improving, and anyone who's willing to join the team, by all means, we look forward to it.
Darren, it's been our pleasure having you on the Stock Legends radio show today. First, we'd like to commend you for coming on the radio show. We think keeping an open line of communication with your investors is very important in today's market, and we'd also like to thank you for coming on. It's been our pleasure having you.
No, thank you for having me. I appreciate you letting us get our story out there, and I wish you the best of luck, and I'll keep tuning